Comebacker. I think this term was invented by a golf announcer because I've never heard it in any other place. And I don't believe it's proper English. Well, actually, I see it is also used in baseball, but with a different meaning. In golf, if you don't know, a comebacker is a putt that must be made because the previous putt ran past the hole, and now the player has to come back to the hole with the next putt. That's a comeback. What has that got to do with the information in this video? Well, hopefully that'll become clear as I get into the meat of the discussion. Hopefully. And if not, well, it's just kind of a funny use of the language, and I felt the need to use it. Okay. Now, I'm not a conspiracy theorist. And as they say, you know who they are, right? It's not paranoia if people really are out to get you. Now, I'm not even on to the subject yet, and I'm already off topic. Please forgive me. Here it is. I saw an article the other day. They claimed that that is managing a budget, managing credit, using OPM to your advantage, smart investing, etc., are not taught at school because they, there they are again, don't want people to be independent of the big finance institutions. No, they want us all to be dependent on banks and Wall Street. The reason is simple. If we all knew that there were alternatives to the standard financing protocols that big finance promotes, the fat cats of big finance wouldn't be so fat. So it becomes a responsibility of each one of us to educate ourselves about what's available and how to navigate finances in the best, most advantageous way that we can for us. So here we go. If each student that graduates from high school or university sent out into the big bad world without the best financial education were a putt, we would each one of us be a comebacker. I hope that made at least some sense. And here's the thing. If you study finance in college, you will likely learn about loans and credit, FICO scores, and cash flow principles, at least to some degree. But even so, certain finance strategies, if touched on at all, are usually only mentioned in connection with business finance, where they are in fact used most, but can be applied to individual finance to great advantage. For example, the financial sweep strategy is used commonly by banking institutions. But did you know that when an individual applies the sweep strategy for themselves, they can pay off debt in a fraction of the time, saving tons in interest payments? That includes big debts like auto loans and mortgages, especially when applied to mortgages. People can save around 60% of their total payments and pay off a 30-year mortgage in 10 years. When you realize that the amortized interest on home loans amounts to nearly 100% of the total cost of the loan, paying it off in a third the time really will save you around 60% of the total cost of the loan. For example, if you finance $300,000 on your home at current rates, the interest charge over 30 years will be around $300,000, doubling the amount you will end up paying for your home. If you can pay it off in a third the time, you will save around $200,000. The implications of that are huge. You can apply that additional $200,000 to retirement savings or to an investment property that could provide a nice income stream for you. And that's if you utilize the standard method for the sweep. If you use a tax-free cash growth warehouse account as your personal line of credit instead of a bank, not only will you save all that interest we just talked about, 200 grand, but you will also earn interest on the money at the same time. And I don't mean by way of value equity growing in your home as you pay the mortgage. That's in addition to the actual dividend interest you will earn on your savings in your tax-free cash growth warehouse as you're paying your mortgage. And the dividend interest you earn will be tax-free. Now, I know this is a lot to wrap your head around. It's completely foreign to most people, even if you did study finance in university. This strategy simply is not taught in school. You see, a tax-free cash growth warehouse account is not any kind of bank account. It does not utilize a bank. A tax-free cash growth warehouse account utilizes the growing cash value of participating whole life insurance. And yes, that is a special kind of life insurance. And a tax-free cash growth warehouse account is not a standard whole life policy. So what is a participating whole life policy? It's a whole life policy issued by a mutual company and that receives dividends on top of the guaranteed interest paid to the cash value of the policy. Therefore, it is participating in the profits of the issuing mutual company. How does the policy differ from a standard whole life policy? A standard whole life policy is just that, whole life with no cash value growing riders. A standard whole life policy has no cash value at all the first year of the policy. It does begin growing cash value after the first year, slowly at first, and then over time it begins to accelerate cash value growth. A tax-free cash growth warehouse account is based on whole life, but it has cash value growing riders built into it, which increase the death benefit, raise the MEC limit, and accelerate the cash value growth right away. Remember, I said that a standard whole life has no cash value the first year, but a tax-free cash growth warehouse designed whole life will have at least 50% of the first year's premium in the cash value the first year. And it continues to grow at an accelerating rate each year after that. In fact, by about the fifth year, 100% of what you pay in premium for the year will be added to the cash value, and that's what gets paid the dividend interest. That dividend interest is compounding and tax-free. I threw some insurance speak in there a minute ago, so if you want to know more about what a MEC limit is, we have another video here that explains it and how it can affect the tax benefits of a policy. That's MEC. It stands for Modified Endowment Contract, in case you want to look it up. Okay, so the idea here is that we're all comebackers when it comes to personal finance and optimal finance strategies. I am truly blessed to have come to know the infinite banking concept and to be in a position to put it to use for myself and to build on it so that it becomes a tax-free cash growth warehouse for my wife and I. And I feel that it's a responsibility of mine to share this knowledge with as many people as possible. I know it's very different from what we've all been taught, mostly by big finance. So it requires that you want to learn a better way and you keep an open mind as things are explained to you. What's nice is that everything is backed up by black and white software generated projections based on historical data and comes with written guarantees. So if you want to learn the most powerful finance strategy in history, and you can keep an open mind, I'll be happy to help you. And you can watch our free 60-minute webinar. The link is in the description box below here this video. The link to buy my books on Amazon.com is also below. And if you'd like to book a free phone consultation with me, the link to my Calendly page is also below. If you'd like to apply to become a client of ours, the link to the application is also below. If you have found this to be helpful, please like this video and subscribe to this channel. Also, please post your questions and comments here. We're here to help, and we look forward to helping you. For now, aloha and mahalo for watching.